It's your boy Dom. I'm back with another great video, and in today's video I'm going to show you the only Forex trading strategy that you will ever need. And by the end of this video I'll show you exactly how you can catch 50 to 100 pips per week like clockwork. So without further ado, let's jump right into it. Phases like clockwork. Okay, it's accumulation, manipulation, and distribution. Alright, also known as ICT's power of 3. Alright, and what I'm going to show you exactly is what you should be looking for when you try to formulate or frame an idea. Right, you're looking at where you are in the phase of a market before you even think about entering any type of trade. Now granted, this goes without saying, if you saw my last video, it was on how to find a directional bias or how to predict the next move. So if you already know how to find a directional bias, you know whether you're bullish, bearish, and now you're trying to frame it and really get surgical, this is how you can start to frame everything out. So you want to see where you are in the phase of the market. So what you want to see is like within the power of 3, right? You want to see the opening, the high, or the low, and the close. In this instance, we're looking to, go bearish, right? So we're looking for price to open, and then we're looking for price to manipulate, right, or go high, and then distribute, and then eventually close off. Right, so this is the bar. The bar that we're looking to form. We're looking for that open, aka looking for that open. We're looking for that high, and then we're looking for that close, right? But during all this time, you want to trade this area here. You want to trade in between here. You want to trade that expansion or that distribution. All right. And conversely, if this was, if we were to be going bullish, you just reverse everything. Right. This would be the low. So you'll be looking for the open, right? You'll be looking where price opens. You'll be looking for the low, and then you'll be looking for the close, right? That is ICT's power of 3 in a nutshell, right? So first, have to identify where accumulation is forming, all right? And now that we know the swing high, we just had a recent swing high. We know that they want to take the market lower. We are going to identify like an accumulation area, right? So we see that accumulation. So price is basically just kind of just range bound in a tight range. What happens is price shoots up, right? Does that manipulation, all right? And then it comes back up and boom, all right? And then you shoot down, and that is going to be for, if you got in on that high, that's about 50 pips right there. All right. So 49 pips basically. All right. So it shot up. If you sold that, right? If you sold into that manipulation, into that high, if you got in around that area, perfectly fine. Right. Now you do see this retracement, so you could have use your fib tool. If you miss that high, right, or if it's just not the time of day that you want to get in, what happens? Price comes, hits that 70 retracement level, that OTE pattern, all right, and it happens right around 6 a.m. So this is typically going to be around the time that you're going to be up trading New York or what have you. So you could have actually caught this trade right in here. If you didn't catch that high, you saw that manipulation, you saw that return, that was an easy retracement, and then boom, right? So you could have caught that for sure, right? So you look for that accumulation, manipulation, and then that distribution. All right, so this is all distribution here. Okay, you have color code that yellow, you got that manipulation, then you have this distribution, which we'll just call it green, right? Accumulation, manipulation, distribution. All right, let's find something else on the chart. Boom. So what do I see here? See another area of accumulation. Accumulation here. It shoots out. Now this one is a little tricky, okay? Because what happens is you get that drop below, right? You get that drop below, but then you also get, so it manipulates to the downside and it clears the deck. So it takes out sell side liquidity first, and then it takes out the buy side liquidity, right? And then price continues to go down from here, right? So I mean, but then you also have that, right? So you have this accumulation, this manipulation to the downside, but we know that we had that most recent swing high on the daily time frame, and we know that we are repricing from a premium to a discount. So we are strong on our bias, and we're early on in our bias as well. So we can trust that even through this manipulation, when it shoots down, this is the real manipulation right here. This is it. So it's trapping people who are, you know, oh man, we're going short. And so they're just waiting to get that breakout, and then they're like, nope, you're not going on. We know we want to. The market makers know they want to take it short. They know that they want to take the market and reprice, but they don't want you to go along for the ride. So they excite you early on, and they take it up, take you out, right, and then they take it down, right. And so let's say you didn't catch this trade, and then it's the next day, right? This is the next day, what have you, or the next week, right? Because this is Monday, right? You can catch this on a Monday because all it is a simple retracement. You take your fib, and then boom, it's a 62 retracement. Easy, bro. Easy money. All right. And so you take it on that 62, and voila, bro. Voila, 50 pips. Like I said, you hold it. Now you get to equilibrium. Look what happens. You get to equilibrium. Price accumulates a little bit more. Does like a little manipulation. You can go on the lower time frames and really refine it. When it goes down, and then it creates this swing low, right? And then it continues up, right? So then once it does that, you start to look on the buy side of the curve, right? You start to look on the buy side of the curve, because we know ultimately it wants to get back to that swing high, take out that swing high, and continue on the up move, right? But this was just a repricing on the lower time frames, because price, even on the higher time frames, on the weekly and the monthly, and even on the daily, you have these candles, these big candles. In between those big candles, you're having all these waves of price, and price shifting around and moving around. So like, okay, so when you see this move, right? So when I'm seeing this move come down, and you've captured your 50, definitely this was a 100 pip move, right? So when, let's see, all right, so now I see another accumulation forming, right? We see that accumulation forming. This is a sell side of the curve of the market maker. So now you're setting up for a market maker buy model, Okay, when price is being repriced, we're below equilibrium, right? Go back if you haven't seen my directional bias video on how to predict the next move. I'm putting a link right here to check out. Make sure you check that out because it's going to add context to what I'm saying right here. So now that price accumulates, we get that manipulation. And then that swing low forms, and then we continue up. Boom. And now we're making a W pattern, right? And the M pattern is when we're going short. The W pattern is when, but this is not an M and W type of video, so don't get it twisted. But now that you see we take out all of this sell side liquidity, right? We create that swing low, right? And boom, price goes. You can catch this low of the day, right? You can catch the low of the day, and that's a different topic of discussion, a different video that I can bust down to show you how to catch the low and the highs of the day. But I just want you to focus in on seeing these phases in the market: accumulation, manipulation, distribution. All right. So yeah, that's it, man. Like, and on this side, if you caught this low of the day, it's over 100 pips. Over 100 pips now. So, and there's multiple ways to entry methods and things of that nature, but start recognizing this on your chart. Start looking for these three phases. Start looking for accumulation, manipulation, and distribution. Make sure you check out ICT's Power of 3 videos, and it'll really add a kind of like even more substance to what I'm saying, and so you can start to see it for yourself and back test this and start to see it, and it formulates all the time. It's those three phases. You have pricing, it's accumulating, it clears the deck, it manipulates, it traps you in on the sell side, takes price up, and then it just moves in those waves. So now, as price is as we're kind of doing this analysis kind of like live in real time, you can expect. So we had that accumulation, we had the manipulation, we had the distribution. It took out that previous high, that previous daily high. So now we're priced at that premium. So price can, open up on Sunday, Monday, and take out that swing high. But now that we're on the buy side of the curve, right? We're on that buy side of the curve. So now I'm going to be looking for price to accumulate, manipulate, distribute, take out the sell side liquidity, and just move in those same phases, man. Like, it happens. Like before this drop happened, the same thing happened. You had accumulation, and price accumulate, manipulate, distribute up, right? And it just did that the whole way up. Then it sold off, or it repriced. I shouldn't say sell off. It repriced from a premium back to a discount. Price got to a discount, repriced back up to a premium. What do you think is most likely going to happen now? This is how you start to predict. This is how you start to anticipate the next move, or where price is going to. You have it mapped out on your higher time frames. You have it mapped out on your lower time frames. And all your targets are refined. You just want to find out, where are you in the market? Are you in a distribution? Are you in accumulation? Are you in a manipulation? Right? And so what you're going to do, you're going to wait Sunday, Monday. You're going to see if price just kind of gets into that accumulation. You want to see price come out, take out that swing high for the manipulation. This will be a point of interest to come in at, to short the market lower, right? To get repriced down to a discount, take out this sell side liquidity to buy back up and take out the buy side liquidity. So in a nutshell, man, I didn't want to make this too long drawn out, but that is your video, how you can catch 50 to 100 pips using accumulation, manipulation, distribution, and the power of 3. So till next time, talk to you guys.